Well, the moment's here. The Fed officially did cut their interest rates 50 basis points. We called it and it came in. But what does this now mean for you holding your cryptocurrency? And where is the market going over the course of the next few days? Well, we've got all of that in this video. So make sure you hit the like and subscribe button. Let's get into it. Like we said, the Fed did cut their Bitcoin. No, they didn't. They cut their interest rates by 0.5% today. What does this mean for the markets? And ultimately, what does it mean for you if you're holding your cryptocurrency? Well, let's unpack some of the details. A lot of people predicted 25% basis points cut. We actually got the 50, which is the first rate cut that we've seen. Now, this is amidst some definite volatility in the market. BlackRock CEO coming out saying that he absolutely got Bitcoin wrong. And now this potentially opens up the market for a significant push. The one thing to be mindful of, though, is this unemployment rate, and history tells us that the S&P does fall significantly post a reduction in interest rates ahead of a potential recession. You can see here, January 3rd, 2001, we actually saw a reduction in interest rates. 448 days later, we saw a significant decline into a recession. September 18th, move it forward, 2007, exactly the same thing. The S&P 500 fell 54%, 372 days after the first rate cut. And then September the 18th. Do we get that or not? This is the bullish or the bearish sentiment. My view is I think we'll continue to move to the upside. So let's break down some of the key things that Jerome Powell did come out. Now, remember, interestingly enough, this wasn't a unanimous decision. Actually, there was a couple of people that thought this was wrong and that they should have stayed at 25. Equally, there was some people in the Senate and many other politicians believed that 75 was the appropriate one. The key thing to pull out, though, from Jerome Powell was this. The economy is generally strong, and the decision today reflects growing confidence that the labour market strength can be maintained. And again, this is critical to think about how this plays out. Longer term inflation expectations appear well anchored, and although inflation has declined significantly, it continues to remain above our target. Consumer spending is resilient, thus meaning people are spending money, which is not a bad thing. This is kind of how you get out of recessions, and ultimately you start to drive the economy forward, is you need to keep people spending. But with people spending, you still have to keep a labour market under control. If the labour market worsens, we can respond accordingly. And his actual sentiment was, well, we'll do it meeting by meeting. Now, the markets didn't like that. And originally we were and did have a pretty strong move on the back of the interest rate cuts. But post some of the comments that Jerome Powell made, the market didn't particularly like it, particularly the desire to look at it on a month-by-month basis and not be too committal to what looks like in the further. They're recalibrating their policy stance, and more importantly, if it's appropriate, and this was one of the big kickers here, we may accelerate or slow down the pace of rate cuts or even choose to pause rate cuts. The markets clearly did not like that statement. Now, if you take a look at what potentially is coming down the line, however, with the Fed, this is looking at the November meeting. November meeting is going to be interesting. This is obviously ahead of the political debate, or certainly the presidential election. Right now, a further 25 basis points is being priced in, but we know this is how this started. 50 basis points did come out strong. If you're part of this channel, we knew it was coming all along. So the market, once again, looking at a potential 25 basis points cut. Well, like I said, when you look at the chart, holding off some key support here around the 50-day simple moving average, but we did wick up to that 100, got rejected again, and now the market's suffering a little bit. 59,600 on the price of BTC. The rest of the altcoin market is holding up. So very interesting to think about how this all played out. Some key things we need to be aware of, though. The end of the month is coming. September, or as they call it, into October, is here on the charts. And again, don't forget that 4% line that we're looking at to not drop below. This absolutely has the sentiment of a bullish September, and then general medium of October is 15 to 20%, which could absolutely ignite the market. Altcoins holding up pretty well, but look, the Fed coming in at that point is good news. BlackRock going bullish once again on Bitcoin and starting to buy. All points, well, pretty much to a good decision on the Fed. Recession is obviously on everyone's mind. We'll see how it plays out. Let me know what you guys think in the comments down below. I'll see you soon.